This is Lee from LG Investing. Here's his YouTube channel. We recommend that you guys like, subscribe, and hit the bell on his channel. He provides a lot of in-depth information and always brings a cool sort of angle to things that maybe we don't always have. And as investors, your blind spots cost you money. So welcome to the show and thanks for coming on.
Yeah, thanks very much. Appreciate it. And yeah, let's have some fun today talking about Enphase.
Where do we want to start?
Vitaly, have you ever heard of this company, Enphase?
Yeah, what do they do? They literally print money.
Damn, look at that freaking RSI. What the hell is that?
Yeah. So
what the hell is that?
I think you started buying around $150 or so.
158, yeah. I'm up, I kid you not, 69%.
That's a great 69.42%.
In 420 days.
They're still so cheap. I know this is hard to imagine that we're all up tremendously and it's overvalued right now, but still, like in the long term of this company, I think we're just like at inning one, $267 right now. It's 36 billion. So this is very important if we believe that this is a growth beast, right? 36 billion is still in the range where if it goes to the multi-hundreds of billions, I don't know if you guys can see that, but I do see that one day this company, 10 years from now, is hundreds of billions of dollars. The chart is insane. And Lee, have you seen me talk about this chart at all?
Yep, can't miss that.
I can't miss this chart. Right. This is back in 2017. Okay, look where we are now, guys. You got to be like.
But these are monthly candles, by the way.
These are right. These are monthly charts. Monthly. November 2021. This is like 5 years later. We are still in the same trend of this company, and I'm like, when is this going to fail? Like, it's possible it's going to fail at some point because it just can't keep doing this. It just can't. The reason I have these orange lines is because every time RSI is low, it's below the 200-day, you have to buy it. You have no choice.
Whatever
you have
price.
to buy it. Okay, whatever price it's at. I don't care if it's in 5 years at $1,000 and it does this. You're probably gonna have to buy it. That's what's gonna have to happen. Recently, back in October, it was at $145.
Right.
I was buying heavy, and oh my God, look at this run from $145.
Can you draw a ruler?
90%.
It's 45 days, almost 100% return in 90 days.
It's a month and a half. Like, I didn't even know that was going to happen that fast. It just seemed like a no-brainer. The fact that it broke out of our main trend, and it's done it in the past before, but it never lasted this long. But they came out with Q3 numbers shortly thereafter, and it just took off like a rocket. So that's part one. It went back into the channel. Watch our videos from a year ago. We said it should be at $275 to $450 in that range when we end this year, if it's going to obey this trend. The traders are watching this. That's what's happening. The psychology of the market is watching this chart.
It had been trading inside of the range with the RSI and the 200-day indicators. This is the first time that it fell out. And even at that 198% run up, it's still basically just getting itself into the channel. Yep. And it still would have a lot more headroom. The other thing about this is not retail investors, right? This is a bunch of institutions, and institutions do follow these charts the way you say.
This is a profitable business. That's the thing. Look, in the short term, it could definitely get overvalued, and it is getting there. We're going to talk about that. But this is a profitable company, and it's been executing like gangbusters for years now. So I think even in the short term, I didn't know it was going to go 100% basically, but I knew it wasn't going to last under the 200-day. This company does not last under the 200-day for too long before it gets bought up. I wouldn't be surprised if we end up at around 330. And there could be a pullback after that. I'm just saying that I wouldn't be surprised if we hit around 330 and then whatever happens, happens. I don't know.
They're not going to continue to go up forever if they're just selling inverters, even if they're increasing that business. The only way for that to go up, as we've seen with Tesla, is when you suddenly enter a new market.
Technicals are truly intriguing. Seems to be a company that's very attractive to trade on, though that's obviously you guys have a couple of options, though that's not what I'm doing. I'm more a long-term investor. I just let it ride. That's
a question for you, actually. In terms of your investment strategy, what's the balance between technical analysis of a stock, whether you want to buy it or not, versus just fundamental research in the company long-term?
Almost all of it is fundamentals and long-term trajectory. Can they tap their feet into more markets? Can they gain market share? And then whenever a stock obviously is below a moving average, let it be the 50 or 200-day, if it's below the 200-day and it's a very thriving, healthy company, and kind of the fundamentals and the chart are disconnected from each other, that's obviously when to buy. And Enphase is a very good example for that.
Here's probably where you bought it, around here, I would assume.
Yeah,
here's
exactly.
150.
That's a good entry point. That's a good entry point.
This is good for all investors. Even if you're long term, you should look at this chart because a high quality company at the 200-day, we know in a lot of high quality companies, that's a good price to buy it at.
I love beaten down growth stocks that are not too overvalued. And at 158, it was, for me, it was at around a fair valuation for Enphase. Now at 267 or 36 billion, I guess, in market cap. It's getting a little bit pricey. I'm just looking for the biggest disconnect between fundamentals and short. And one other company that we're going to talk about, it would be PayPal, but Enphase was kind of in the same situation. And there's also a second reason I wanted to increase my exposure to solar and battery and microinverters. So I also added on top of that to Array and to First Solar. And all of these stocks did pretty well over the last couple of weeks.
I think the technicals I'm done with. And I take offense to say that I only deal with technicals and call options. I'm a long-term investor in Enphase. But when you see like these massive dips, the only way to maximize return is to buy long-term call options. I usually buy 2 years out when I see the disconnect, because I know at some point the disconnect is going to reverse itself. And that means those call options will double way before the actual shares will. So
the reason I'm not doing options at all, like none,
at all,
and also no margin, like zero, is that I don't want to bet against the timing of the market. Imagine buying Tesla calls in like December 19, January 20, just before the COVID pandemic hit. You were right with every fundamental analysis, but the market just throws you off the cliff, right?
I don't buy the 30-day calls. I buy the 2-year leaps.
Any call options that we bought, or at least me, I've always been a year, 2 years out.
Most of my position is actually shares, but when you run out of money, then you got.
I don't know what that's like. I don't know what that's like. What are you talking
when you run
about?
Out of actual
money?
Cash,
Who runs out of
you're
money?
Like, well, you're like, how do I pay 15,000, or can I pay 4,000 and have the same control over the same shares?
When you're getting into a stock, you also have to have a plan when to pull out and lock in some profits, because you don't get any value out of this investment if you sell it when you're 80 years old, right? All three of us are young enough to make good use of compounding.
Especially with a company like Enphase, which compounds basically, we'll talk about it, but it's roughly 50%, 40% CAGR on Enphase.
I think the most important learning a lot of investors have is start early, be consistent. And I think when you start in your early 20s, that's the best decision you could ever make.
I read a quote that said, time in the markets beats timing the market.
Yep. Yeah, that's exactly it.
How many households are there in the United States? Single family homes, 208 million single family homes, okay? 37.8 million multifamily units. This is just the United States. We're not talking about the rest of the world. We're talking about 240 million possible locations, households. Not counting households.
That's roofs, right? That's roofs.
Not counting even commercial. So now let's go to commercial. I looked up these statistics. 5.9 million commercial buildings containing a total of 97 billion square feet. I'm not even going to do that math. Forget about that math. Let's just add 6 billion extra locations to install solar. 250 million. I'm sorry. We have 250 million locations, approximately. 3 million installations across all markets segments, the vast majority of which residential system. That's it. That's the solar install. We're at 1.2% penetration of solar in the United States. I can't even imagine the market for SolarEdge, for Tesla, for Enphase. I can't even picture what this company is going to be in 10 years, because my limited linear mind does not understand the exponential growth. Just like Kathy Wood says, I don't get what's going to happen here. And I think I'm underestimating what's going to happen here.
California put in a rule. Every new house that's built up to 2021 must have solar. Now, there's ways of getting around it. You can put a 3 kilowatt system in there, right? And you get away with it. But still, once it becomes mandated, it is a business that has to go up. That's 97.8% of the country that still remains.
Are you guys mandating this kind of stuff too?
Not yet, but we are starting to see more and more solar on roofs. We get less sunshine compared to like LA or let's say Texas or Oklahoma or whatever. But I think we wanted to put solar on an indoor sports facility like 10 years ago, and it costed like $1 million plus. We didn't do it, or our city didn't do it because it costed too much. And just this year we put solar on one of our schools for like added costs of like a couple $100,000. And we did the math, and it actually pays for itself over like 12 years or so. So one thing that I'd like to ask you, Vitaly, is does your system pay for itself within like, let's say 10 years? Because if it does, you don't need a mandate. Like everyone with like a brain will put solar on his roof.
Believe it or not.
Hold on.
It's so not true.
It's so bad.
Yeah, because people are morons.
I'm itching for this one.
Oh man.
So it's really hard. People don't understand math. It's like, and I hope the guys watching this, people watching this, at least in New Jersey, my solar is free. It costs $45,000. I got a loan. 30% is a government credit. They write you a check. After you pay your taxes, they're giving you 30% back. So I was going to pay my taxes anyway. So 30% goes back. Number two, New Jersey and some other states, there's like 11 of these states that do something called SRECs and TRECs. It's basically carbon credits for polluters. They have to pay me for every megawatt hour that I produce. Now, this is where people's mind starts to blow up because like I talk to my neighbors about megawatt hours, like what the hell is that? And 45,000 for your system? Oh my God.
That's why they run out the door.
They run out the door. They don't want to hear it. Every month, the government cuts me a check between $250 usually and $400. It's not the government. It's technically polluters. They cut me a check. Then what happens? I do have a loan. So I have a loan on the side. That's $350. I take that SREC money, I move it over and pay the loan. So I am the middleman between this loan and the polluters. I'm actually not paying almost anything. My bill is like $6 a month.
It's kind of like it's the same business model as buying a home and you get rent every month. And the rent is covering the mortgage and giving you a little bit of profit.
States like New Jersey, I think Georgia, there's a bunch of states that actually give you this massive incentive to go solar. But a lot of people don't because they hear the sticker shock price. It's $45,000 for the system, for my system. It might be a little bit cheaper now. Maybe it's $35,000. But the point is people hear the sticker and they don't understand that there's all these other things, incentives already playing themselves in the States. They don't care. So this is why there's such a big opportunity. As it doubles and triples and quadruples, like you're talking about, their stocks will follow this trajectory of adoption of solar.
I have it here in LA where I have a lot more sun. Where you are in Switzerland, latitude wise, what is that comparable in North America? Are you like Ontario, like Canada latitude?
Let me look that up.
In terms of hours of sunlight per day, because my question would be is if it's not solar, what is the dominant renewable energy source where you are?
It's actually hydro. We have 60% of electricity coming from hydro. 30 something is nuclear and the rest is wind, solar. We do and import a lot. In summer, we export a lot of energy, and in winter, we import a lot of energy, mainly from France, coming sometimes from nuclear and coal. So here's the kicker. And we are building new dams, like hydro dams that function like a battery. So you can pump water up when you have like too much electricity and let it rinse down through the hydro plant to generate electricity. So these are essentially huge batteries. And we're going to expand this capacity, but the issue kind of is that we're shutting down our nuclear reactors over the next couple of years. So there's like a 35% gap in our electricity generation. That's not that good. Germany was front running the energy transition to renewables, and they actually had to activate new coal plants because they shut down nuclear.
The nuclear plants, I know there's been problems, obviously, but from everything I've read, there are ways to build them where they're extremely safe.
Out here, they only let you rate your system for 107% of what your average 3 months usage was. So I waited until the summer when my usage was high, gave them my bill, and then they only let me install a system that was 107% above that, which I was noticing. The first great thing about it was that it leveled out my bill. Since I was only paying for the equipment and not the actual energy, my bill was the same every month. It got rid of those summer spikes, right? Sometimes you get a bill for $1,500. And then on top of that, I was using a lot less. So I was getting a lot of these credits built in as well. But then I also got an EV. So if I get a bill for $50 for my electric bill, that's 2 months worth of the electricity that's running my computers, my heating system, charging the car. It's my electric, it's my water pump, it's my oven, right? My stove. See, I mean, when you go and you start asking yourself, is $25 a month too much to pay for all of that? And like you said, eliminating the gas bill, which is right now, gas is at an all-time high in LA. 2 days, I got to return my car. And the last tank of gas that I put in it was $62 something, and I was filling it before then for $40. So people that are against solar don't think long term. Americans in general do not think long term. It's the same reason why people don't think long term in the markets. They don't think long term about investing. They think about the right now, maybe 2 or 3 months out. You tell them that it's a $30,000, $40,000 system, and they just say no. They would
their brain shuts off. That's the thing.
Yeah,
their brain...
they just shuts off, and they want to pay they're like, well, it's only $100 a month. It's only this. They do not think about compounding in the good sense or the bad sense. And that's what I think is the real barriers to getting around that. But Once it's mandated, it has to be on the homes, then I think people will see the benefit month over month, and that will in turn generate higher sales. But I think the mandate is actually going to be necessary for people to be forced seeing the benefit of it.
There is a reason you don't want the Tesla system. And unless you just want a pretty box in your house, that looks cool. Don't get me wrong, it looks really beautiful, okay? But they don't use microinverters. Microinverters work because per panel, you put a little tiny circuit board and it converts the DC to AC per panel. And it increased the cost per panel, by the way. You're actually adding like basically, it's almost $100 per panel, you're paying more. But in these other systems like Tesla, what happens is if you have these panels lined up and they only have optimizers and they end up in one location, a central inverter, what happens when that central inverter goes down?
Yeah.
I call up my guy. I go, hey, can you go fix this? He's like, yeah, I'm going to get around to it. Are you available in 3 weeks? No,
Yeah.
honestly, that's what's going to happen.
Essentially, the heart of the solar system is the inverter, because the panels create DC energy, but you need AC for your house.
Yeah.
So that needs to be converted. And every time you convert, there's a loss. There's a loss of efficiency. The Enphase systems convert the energy to AC at the panel. So that energy is coming in AC. It's already ready for the house. Each panel directly is creating AC that goes into the panel. On a Tesla system, all that DC is collected. There's optimizers that bring all of this energy into one inverter that takes all the energy from all the panels and converts it to AC at the end of the line. Now, to Vitaly's point, if that inverter goes down, none of your panels, the energy from any of your panels is reaching your breaker box, and you're down if they have to remove that panel. And on a Tesla system, they take the inverter off the wall, ship it to a factory, fix it, and bring it back. Now you're down for the length of time that's happened. With an Enphase system, if one inverter goes down, and it actually happened to me, I had one panel that wasn't producing as much, and my inverter was down. So what happened? I was getting slightly less production because that one panel was dead. The guy came out, went up on the roof, and started messing with the inverter until he fixed it and got that panel back online. But during that time, the rest of the system was still producing. In other words, the inverter is the most important part, but it's also the biggest fail point. If that fails, you don't have solar. But if you have it on each panel, you're protected. You still are creating energy while that's down. And look, these guys do take a long time to repair systems. So it's mostly to prevent when you have a problem, and it's also for efficiency.
So I was about to say, like, that sounds to me like Tesla's going to buy Enphase.
No.
I would love it, but it's probably not going to happen.
I don't think so either.
Enphase is so... See, the thing is, Tesla is very arrogant too. And look, I love Tesla. I'm doing well in Tesla stock, but they're arrogant. They think they can do everything themselves. And Enphase has really good tech on this solar stuff. This is Enphase's Investor Day 2021 webcast about everything they're doing.
We're going to be talking about our transformation from solar company to an energy technology company. 2021 has been pretty decent. We're growing quite well, approximately more than 75%. Compared to 2020, we expect to do $1.37 billion. We're very happy that we have over 900 plus installers in our Enphase installer network. Installers are our lifeblood. We made 2 acquisitions earlier this year. One was a design and proposal software company called as Softdesk, and the other is a permitting services company called as DIN. Both of them are doing exceptionally well. Every quarter, they are breaking new records. For example, the permitting services business does almost 30% of the entire North American residential solar business. So we are going to make these services even greater. We have shipped over 39 plus million microinverters till date, and we are in about 1.7 million homes. I'll also talk about the power of the data that we have from these 1.7 million homes and how we are going to improve customer experience from that.
Remember we looked at the statistic that it was 3 million homes that had roughly single-family homes that had solar? He's in half of them?
More, 1.7 million.
Is my the only one mind getting blown here? Like, he's in 50%? Like, where are the competitors? Besides SolarEdge, it's literally 2 companies that control the whole thing. Am I wrong? Assuming that statistics are correct here, that the 3 million homes, he said 1.7. I don't know. Even if he's a little bit wrong, still, when you control 40% of a market, like, are you a monopoly almost?
That's Tesla-sized market share. That's roughly what Tesla has of the EV market, and you see how dominant they are.
They had these two acquisitions, Softdesk and SDIN. I think Softdesk, that is a company that sort of does the layout of all of this solar stuff. So they need some piece of software that, what's the best way to put solar on your roof? SDIN, the other company, and honestly, if there's someone out there watching, please correct us if I'm wrong. We didn't do enough research on this, but that other company does all the permitting. So imagine someone streamlining all the permitting across all 50 states.
Well, just to explain to him why that's important, again, if you watch our NeoVolta video, depending on the state, they all have different rules about solar. So for example, Las Vegas is sort of anti-solar. Electricity is so cheap, the energy companies there, they incentivize people, so permitting is really high. So if you want to get a permit to put solar on your roof, it could be upwards of $1,000. In places like San Diego, where they get a lot of sun per year and they're just a little bit more green and future focused, it's free. So having a company that affects the bottom line price for the customer, and that's a hard cost, right? So having a company that helps you deal with or even lobbying, right? Lobbying them to bring these permit prices down helps with penetration.
So I think this company actually, helps you, knows the code for every single state, even parts of the different world, but let's say in the States, and will help solar installers get their permits and get everything through without wasting time. So this is how they're thinking. They're not thinking like, oh, we give you the microinverter and you go ahead and install. They're like, no, let's do the whole stack. They're doing batteries now. I started storage and it's grown to, I think, 100 megawatt hours this past quarter or something. We can look at the stats, but it's getting bigger. Yeah. And the other thing is they just bought a charging company that does like home charging and commercial charging. Anyway, there's so many things going on with this company. They're thinking vertically. They're not thinking like the conventional wisdom. Oh, they make microinverters. No, it's over. They're an energy company. So this is my bull case now that going forward, that this is an energy company, just like Tesla is also an energy company. And SolarEdge might also be. Like once I keep going back to SolarEdge too. I don't have enough SolarEdge. I have 0 shares. But all these three companies are going to be the future oil companies.
No, totally. I agree. Actually, solar market is a very rapidly growing market with a low penetration today. Will be a lot bigger, let's say 5, 10, 15 years from now. And it's always a good approach to like think, okay, which industries are going to be dominant in like 10 years from now, and you like pick 1 or 2 major players in this market, and if they don't screw up, you'll be just fine with your investment, right? And I think Enphase will do a little bit better than not screwing up.
The other thing to consider too is as more people buy EVs, it's a quick leap to just get to solar. It's like Apple. They'll get you in the product and then they'll upsell you services, or they get you with a service and then they get you products. It's a way of lowering their overall customer acquisition cost. And so you could see that as EVs become more adopted, people will be more inclined to get solar. And if they're getting even half of that market, then basically any EV that's sold can help Enphase. Any EV, doesn't matter the company. Right, it's gonna help them. So they have catalysts, or like that can become a tailwind as this stuff happens. It just naturally helps them increase their business.
From the third quarter of 2020, and we've been sequentially increasing our battery shipments. This quarter, Q4, will do between 90 and 100 megawatt hours. Total for the year, including that midpoint of guidance, would be 245 megawatt hours. Pretty decent performance. We are learning a lot as we introduce batteries, because right now we are in the path of power, ranging from commissioning to homeowner experience. We are learning every day and we are determined to be the best. 40% gross margin. We'll be at 40% gross margin for the year. It's possible due to disciplined pricing and cost. The situation, macro situation, as you know, is a little bit tough. We had our own supply problems earlier this year, but those supply problems are by and large done. And now we are only dealing with the macro logistics issues, which is true for everybody. Despite that, we've been able to do 40% gross margin, so we're proud of that.
I'm gonna stop there for a second because he said something so important to us. Have you heard of a company that produces hardware besides Tesla that has 40% gross margin? I know, who else does it? Apple. So let's talk about this 40% gross margin. Lee, what do you think about that? Is that good?
Insanely good during these times, especially. I really like their margins. I like their growth. One question though, I don't know if you guys know that. What kind of battery cells do they use?
Oh, I have no idea, actually.
Oh, that's an interesting question to see. What Tesla does very effectively with their gross margins is when they want to increase demand, they can simply just cut a little bit into their gross margins. If they were at 15%, they don't have much room to play with. So if they do see that a competitor is coming along and making waves, they were a new startup, all they need to do is lower that gross margin for a little bit and get more penetration, right? Now that they're in batteries, it's a way of upselling customers, right? Yeah. Because now if you just sell an inverter, you get that money once. But now you have batteries and you have other ways that you can continue to monetize that customer.
they're doing the whole planning, the permitting, the microinverters, the batteries. We're going to charge your car. We're going to charge you also energy. I'm sure they're going to actually thinking about how do we charge recurringly to produce energy. Because
once they create a monthly charge, it's a wrap. The
game over.
Well, because profit margin is 100% on that. It's 100% we're selling software.
Well, whatever it costs to produce their energy with solar.
So now, if you want Tesla solar, whether it's the roof or the panels, you have to get battery. You have to get a Powerwall now.
Yeah. So Tesla's, like I said, Apple model. People are going to go for that. People like me who do a little bit of research, they're like, no, I can get a cheaper system that's actually higher quality. I know that's crazy. I'm saying this about Tesla, but there is cheaper systems right now, higher quality, that won't break down as much as a Tesla system.
And what we do is state of the art. It's software-defined power. We just introduced IQ8. So an IQ8 is a software-defined microgrid forming microinverter. So it can form a microgrid in the absence of the grid, in the presence of sunlight. In other words, if you have a lot of solar, you also need to have a lot of batteries. But IQ8 removes all of those constraints. Because IQ8 is super fast in responding, you can have lots of solar on the roof with less batteries. And it's a big deal. It gives customers a lot of flexibility. They can have any configuration they want.
Software-defined microgrid forming microinverter. Usually when you have solar, and we talked with the NeoVolta guy about this, your system shuts down as soon as the grid goes down. They're creating this microgrid thing, or their chips are responding so fast now that it takes over and says, okay, we'll just feed your panel, we'll feed your house panel, your electrical, right from the panels without needing a battery system. That's a big step. I don't know if I'm making this clear, but you do not need any more battery system, because they'll feed the power. They'll tell the grid, don't worry about it, we've got this. Okay, could disconnect you from the grid that has to be fixed. So a lot of people are not doing this. Surprisingly, this seems like an obvious thing. I don't know, but I guess this is hard.
When the power goes out, you cannot pump solar energy onto a grid that is down, because if, say, a transformer is down in your neighborhood, they need no power coming in. But since it's bidirectional, any houses that are generating solar will send power to that transformer while they're trying to fix it. So the power companies shut it down. So unless you have a battery, if the grid is down, your solar panels are down. It will not generate power. What they're doing is this microinverter will allow it to create a soft grid, a software grid that will not overload, will not send power back to the company, so they can do the work that they need to do. You're still disconnected from them, but it is feeding power as you need to the house, which means that if your power goes down and you don't have a battery, you can still have energy while the sun is shining. Eventually, the purpose of Tesla solar, what they want to do eventually, is to decentralize the power grid. So right now, we are vulnerable to a targeted attack. If they attack, say, the power company, the grid's going to go out in hundreds of square miles. Tesla, what they want to do is, if you've got 10, 15, 30 of these solar installations in relatively the same area, understand that when electricity is moving at distance, it loses voltage the further it goes. That's why they pump the voltage so high when they're sending it across state lines and then step it down. So the shorter you can keep the distances that the electricity is traveling from creation to consumption, the less loss there is. So for example, if we all live in the same neighborhood and we all have 3 Tesla Powerwalls and we live relatively close, if I'm overproducing and you're underproducing, it's theoretically easier to send the power from my house directly to you versus going back to the grid and then them feeding you power. You understand? Which also means if that power goes down, then it's only going to go down locally. You're going to create a local outage, and the U.S. energy grid is way more protected and stable. And I'm assuming that this is where Enphase is going. Once you have that penetration in neighborhoods, you're creating sort of soft networks between these systems that they can trade power with each other. Say if I'm overproducing and my batteries are full, well, I can send it to you. If you happen to charge your car the night before and drain your battery, now you're getting power in a short distance, so there's a lot less waste. Essentially, it's about efficiency. It's just keeping the entire grid efficient, and every new system that comes online makes everyone's systems more efficient. That's huge.
Just the last thing, and I do want Lead, you have to take over at some point and add your 5 minutes worth of sense here. Not 2 cents, 5 minutes worth. Sure. Maybe I don't know, did you learn anything about Enphase that you didn't know? Is this even informative?
A lot, like the technical at the beginning, and now the technological stuff is
the fundamental
pretty
stuff.
Amazing.
So yes, and this is why I'm so heavy, and I'll do anything to get more Enphase. It's a little bit overvalued, I agree right now, it's a little bit hot. But anyway, let's look at the future of Enphase. Enphase revenue. Now, if we look at it, it was very spotty in the beginning. So if we're talking about 2015, 2016, this stock is trading real low. I think it's like $10, $5, $8, $20. It's somewhere in that lower range. It grew basically 100%, 25%. And this last year, 77%. So we're talking about a 77% growth over the previous year. So we're talking about from 2021 to 2025, this company is going to go to 6.7 billion revenue. That's what I'm expecting. That we are in the beginning of this S curve. You could see it ramping up. So that's why Enphase is not something to be taken lightly right now. Like if you were to invest between FUV or PayPal or Microsoft or Enphase, I mean, Enphase seems like a no-brainer. If you're modeling out just solar itself and these microinverters, I'm not even counting the new charging business they just bought. And I don't know how much of the battery business is included in this, because I think just the microinverter business in terms of our solar expansion in the United States and the rest of the world might be able to fill this gap without knowing what kind of chemistry they have. That's what I think, but I could be wrong.
I just want to share something real quick, because this is what we're talking about now. Okay, so if we just look at the top 10 energy companies in the world, let's just look at the revenue that the top 10 energy companies make in the world. Okay, this was as of 2020. NL. This is the company that I have. I have my car charger is with this company. They make 89 billion. This is they're in Milan, I think. 89 billion a year. Électricité de France, 80 billion a year. ENGIE, I don't know these. E.ON, I don't know these. Exelon Corp, 34 billion. General Electric, they make 33 billion a year. Kansai Electric Power, these are like the main power companies. These companies are, I mean, just add up this, right? Even if they get, and what's Enphase at now? They're making what, $1 billion a year?
Yeah, they're 90 times smaller than that top company.
90 times smaller than the top company, and especially if they're at 1.7 million households now. If you just 10x that, because at some point the U.S. is going to mandate that you have to have solar, right? Just 10x that. What is their revenue at 10x? I mean,
that was a great statistic. I didn't even know that's like the top number one is, and that was 2019, I think I saw. So who knows what it is now?
It's at 2019 leading into 2020, and that's accounting for the pandemic. So everyone made a little bit less money, right? But I'm saying the amount of money that these companies are making, once you get to generate the power, it's like, this is why oil companies make so much money, because it comes out of the ground for free. Once you get the infrastructure to get it out, the more you get out, the more money you make. It's the same thing. Once you make your systems more efficient, once you get it, an inverter that's 5% more efficient translates into a huge amount of money for you down the line. So it's like, it's so easy for them to just turn these little levers and start making more money because it's technology based. So I mean, I just don't see how they make less money. I don't see how they're going to make less money year over year. You know what I mean?
2017, for the whole year, 2017, they only sold 2.89 million inverters. Okay. Under 3 million. 2018, they lost market share in terms of, they sold less, meaning not market share, but they sold less inverters. 2019, more than doubles, 123%. 2020, 6.8 million. Once again, it seems like a choppy sort of like growth trajectory. Like, we're on an S curve. No, we're at the bottom. We are literally at the bottom of this thing. And that we're looking at this price of $230, thinking it's overvalued at 36 billion. This is an energy company that's the future of energy. Remember, they're not planted on the ground they're worldwide. This is what's also crazy. They're selling their products everywhere. You know, like my bull case, by the way, if I was to give a price prediction for the 10 years, it's probably in the neighborhood of like 2,000 a share. Like, if I was to be honest with myself, and that's still half. So let's say they're at a 10 billion revenue, 12 billion revenue. That's actually where I think they're going to hit around 1,500 to 2,000.
But a 10x from where they are now would put them at 11 billion a year. They wouldn't even be on the list of the top 10 energy companies in the world. And we know that somewhere in our lifetime, Tesla will be on this list, right? Probably be one of these, just the Tesla Solar will be on this list. You're going to need a number two. And right now, if you ask yourself, who's going to be number two if Tesla's number one? Just ask yourself, and you just look at the market, look at everyone else, look at the other companies in this space. It's hard to make a case for someone other than Enphase to be number two.
Do you believe anything we've said right now? And let's see what you believe.
I don't have a spreadsheet, just like I'm using, actually, I don't know if you know it, hypercharts.co.
I do know, yes.
Yeah, I'm just putting my estimates in there from time to time with a couple of companies. And the thing I just was asking myself is, as mentioned, the valuation is a little bit stretched now, but where would be your price target? Mine would be for the year, as mentioned, we have $1.37 billion in revenue. Now, I would be a little bit more conservative with growth. I think 40-50% is very, very aggressive, though it could happen. But just to kind of try to come up with a market cap or so, let's say it's 30% only. So
On Arcimoto, he's the bull. I'm the on Enphase. I'm the bull and he's the bear.
But wait,
on
but
stocks,
to
I'm
be
also a bull, but less. I'm a smaller bull, right?
but
So-
wait, but to be fair, he's still accounting for 30% year-over-year growth. Like
I know, it's
that's
still a
still
lot of growth.
freaking massive. So it's not like he's just being a little more conservative. He's just being a little more
Right.
realistic.
Yeah.
But that's fine. That gives you a range, you know.
So markets probably will look out in the future, like 12, 18 months or so. So we're looking at something like $1.8, $2 billion in revenue next year. So we are still at around 15-ish or maybe a little bit higher price to sales. In terms of profitability, I think a lot of these logistics issues are going to subside quite a bit. Not going to go away fully, but like I think margins could improve. The bottom line, this would be the fourth quarter here. So we are at around $1.4 billion in revenue. So even if we account for like 30% growth or so, so we are at 1.37 this year, and next year maybe at 1.8, maybe $2 billion. At $36 billion in market cap, we are still above 15 price to sales ratio. And I think bottom line numbers, margins are going to improve. I think this drop we're seeing here in this year is a lot, or for a large part, due to the logistics issues. So I think we could get back to like 24%.
There we go.
So we are at $1.37 billion in revenue, right, for the full year. If the fourth quarter is at around $400 million, so that's their guidance. So we are at $1.37 billion. So we are growing 30%. Let's be a little bit conservative, or let's say 33%, $1.8 billion in revenue. If the bottom line margins improve back to the 24% range, we're looking at roughly $400-ish million in net income. So market cap, 36 billion divided by 400 million, we're still a 90 price to earnings ratio on a 1 year forward basis. So that's still a little bit pricey, and you really have to believe as strongly in Enphase like we do in Tesla to support this valuation.
It's important to consider that you're going to get these dips in Enphase because institutions are in it now. And once they make a certain percent profit, they have to take profit. You see this with Cathie Wood all the time, and they freak out when she sells Tesla, but she sells Tesla when she's up 35%. She waits for the dip and buys it again. So this is what these institutions are doing. And as they keep seeing revenue grow year over year, they're just going to keep buying it, keep making money, keep selling it, keep buying it. And this is why it's continuing to do this up and down movement in the trend that you see. And retail investors, all we're doing is jumping in and piling on those guys. Let's be honest, retail investors are not moving Enphase. It's institutions.
Why am I so bullish? Is there an actual reason besides assuming 40% growth forever, right? Like, who says that has to happen? Well, Enphase does. So that's who said it has to happen. We have already added a second fully automated line in Q2 at our contract manufacturing partner in India, bringing that quarterly capacity to over 1.5 million microinverters in India. Along with our existing capacity in China, we expect to easily achieve our target global capacity of 5 million microinverters per quarter by the end of the year. Next year, how many microinverters can they make? Easy math, 20 million. Am I right?
That would put them at your 2024 target next year, roughly.
It's a possibility that their growth is bigger. They have said we cannot keep up with demand. They are supply constrained. They are like Tesla. They're supply constrained.
Oh, that's very bullish. I agree.
This company is so bullish, it's coming out of my ears.
Well, the thing is, with like 1 or 2 more years of data, we will know exactly where we are in the adaptation curve, in the S curve. We know we're in an S curve, right? We know where we are. Like we're in there with EVs, and we're in there in this. But we don't know exactly where.
Lee said everyone thinks it's 30% compounded. This is what most of the Wall Street is thinking. Maybe 40%. What happens when they double next year their actual capacity to 20 million?
It would mean that we're further along in the S curve than we think. It would mean that we're maybe 2 or 3 years behind. But remember, there was a statistic that said that the coronavirus, that pandemic, accelerated our advancement and adaptation of certain technologies by 5 years. So we might be 5 years off. Maybe we're 5 years off of where we think we are in the S curve. The other thing to consider is once you have a company that's making money with batteries, I can't stress this enough. The more batteries they make, the cheaper they get, the more efficient they get. So they are selling smaller batteries that are more efficient and have higher capacity. That means you're doing more with less material on an exponential level. It really starts to get away. It just becomes almost impossible to really accurately predict.
with Lee from LG Investments. Thank you for coming on again. We appreciate it a lot.
And
Thanks for having me on the channel.
Hey guys, if you found this video useful, please hit like, please hit subscribe, and hit the notification bell for more content like this.
Now I'm sad I can't buy more Enphase. Anyway, that's the episode. Buy Enphase. Lee, can you end this for us? Are you buying Enphase Monday?
No, actually, I'm happy with it.
I love it. I love it. He's like, nah.
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 Cue the end page.
If I was to make love to a chart, it'd be this one.